and aspirations with this acquisition?
It's about the way people are working and giving them the best tools to find all the information they want.
Where the CEOs go first. The world leader in business news, CNBC. Mr. Greenspan takes Manhattan. Live coverage.
All right, let's check with 3 minutes and 45 seconds to go. The Dow up 33 points, NASDAQ down 5. That's the trading time left. Time now for our closing countdown, and Ernie Ankrum is with us. He's the Chief Investment Strategist at Russell Investment Group. Bob Pisani is at the New York Exchange. Leslie LaRoche is at NASDAQ. Welcome to all of you. Mr. Ankrum, what do you make of the market's moves today? I guess really you'd have to say a response to the Dow, at least, a response to falling oil prices and falling bond yields.
Yeah, and I think the bond yields got a little ahead of themselves yesterday. Ultimately, oil is not going to dictate where these interest rates go. I think it's going to be inflation expectations, and I have confidence in the Fed. I think the market does too.
Bob?
You know, Ernie, I want you to just weigh in on the big debate today, and that is what exactly is going on with the market leadership here. The markets seem to be looking for a little bit of a rotation here. It's not clear, but the fact that we've seen some weakness in oil stocks and in basic material stocks that have been market leaders is causing some people to think that maybe it's about time for a little sector rotation, or are these people just getting a little nervous too soon?
Well, I don't know about nervous too soon, Bob. Maybe hopeful. I've been one of a number of people that have thought that growth stocks had been underappreciated here for some time, and clearly energy, which are more defensive, have ruled the day the last few months. Even more conservative ones like REITs dominating for years. And I think both of their time may have come, and I hope that we are seeing a rotation. That would make me look a lot smarter.
But where? I mean, we saw a little bit of a bid to semiconductors today. National Semi had some positive comments, but they're not a big market leader right now. People keep talking about drugs, but everybody's worried about some new concern that might come out of a health issue there. What is there? What is out there that's cheap that could be a natural leader?
I don't know about cheapest. I think that there are companies out there with consistent earnings in sectors that look good. Consumer discretionary has some areas that are good. Even some financials, not all the financials. You know, Goldman, we like that. Our managers are buying not big pharma in the healthcare, but devices and biotech. So you can't take broad sectors and describe this market, I think, but I think there are elements of each sector that look really attractive here.
Ernie, we're 3,000 points away from where the NASDAQ closed 5 years ago today. Where were you in terms of your portfolio or in terms of your investing strategy 5 years ago? And what is the best lessons that you've learned?
Well, 5 years ago, you know, we're a manager of managers. We advise relatively conservative portfolios of stocks and bonds, and boy, in 1999, that was a tough thing to be telling people about. Everybody wanted to be where you are, Leslie, and so, of course, you know, you look a little smarter in retrospect. We were doing the same things in 2000, 2001 that made us look smart, that made us look stupid in 98 and 99. So I think the long-run lesson we learn is that investors that try and get too caught up on short-term movements in markets do themselves more damage than we can ever make up for them as investment advisors.
You were telling people to buy bonds in 1999?
Absolutely. Of course, I was telling them to buy bonds in 1998, too, so.
At least you're consistent.
Yeah, wrong a year and a half.
All right, thanks very much, folks. That's Ernie Ankrum. He's the Chief Investment Strategist at Russell Investment Group. Bob Pisani at the New York Stock Exchange. Leslie LaRoche over at NASDAQ. And Canada, the Honorable Gordon Campbell, he's the Premier of the province of British Columbia, gets to do the honors today and ring down the closing bell on a day that will see the Dow up about 40 points after yesterday's triple-digit decline, and NASDAQ off about 3 points. Stay tuned, however. One of the day's big stories about to break as Intel issues its mid-quarter update. I'm Tyler Matheson. Thanks for watching the first hour of the closing bell. The second continues now with Maria Bartiromo.
From the world leader in business news, this is The Closing Bell. Live at CNBC's global headquarters, Maria Bartiromo.
And good afternoon, everybody. Oil pulls back and the blue chips move higher, but technology traded down as investors await potentially market-moving news from Intel. The big chip maker's influential mid-quarter update is scheduled to be released about 15 minutes from right now. We are watching, and we will have it for you as soon as the news is out. Also today on the bell, Bill Gates speaks to CNBC as Microsoft hires an outsider for a key position. And we'll take you to the Bernie Ebbers trial, where the jury has been deliberating for a 5th day. But first up, reversing course on Wall Street. Yesterday, oil rallied along with interest rates and stocks fell. Today, it is oil and interest rates that are down and stocks that are up. Crude oil for April delivery fell below $53 a barrel in today's trading session. Take a look at where it ended at $53.54, down $1.23 a barrel, or 2.25% lower. Also moving lower today, the yield on the 10-year note, as you can see, now at 4.47%, after yesterday hitting the highest level since last June. Take a look at equities now as we end another trading day on Wall Street, with the Dow Jones Industrial Average finishing up 42 points. Financials did well, 10,847. The closing price on the blue chip average. NASDAQ Composite was down, but it did recover somewhat in the final hour of trading, with a decline at the close of 2.5. Standard & Poor's 500 index on the upswing with a gain of nearly 2 at 1208. While the broader market is up today, big energy stocks like these are slipping on oil. Take a look at what happened in the energy group yesterday. Of course, we heard from ExxonMobil Chairman and CEO Lee Raymond, who said oil was not sustainable. Sonny, as always, on the floor of the New York Stock Exchange. Leslie LaRoche is at NASDAQ. Bob, what happened today?
Well, energy is at the heart of the market debate. Right now, the question is, are the key market leaders, which include energy, starting to show signs of being a little bit tired? And if so, what could replace them? Let's take a look at the markets today. The story this week is the big market leaders, the basic material stocks and the energy stocks, the metal stocks, have really been somewhat weak the entire week. I would throw in home builders, a slightly different group, on top of that as well. Those are the big market leaders. They've been weak all week. And the big issue is the market trying to look for new leadership at this point, and what could emerge? There really have been no other market leaders emerging, certainly not drugs, certainly not some areas of semiconductors, so the issue is still very much up in the air. But let me address this issue about this energy stock weakness that Maria mentioned. It's not just today, it's been going on for a good part of the week. The energy bears out there have a very interesting point. They say we've seen heavy volume, declining price action. That's a warning if you're a technician. Secondly, say there's too many investors in this group. It's too crowded, and there's lots of new paradigm talk about oil at $80, and they say that sounds like internet stock talk. Too dangerous. The bulls say the cycle is very far from over. There's no bubble here. ExxonMobil's PE is only 15. That's not high. Some people are still raising their numbers on these energy stocks. Finally, I think the majority here is with oil and energy stocks at their highs. Profit taking is normal. That seems to be what people are saying at this point. Oil is the wild card here. $80 oil, these stocks keep going up rather dramatically. Let's go over to Leslie, as always, at the NASDAQ.
Thanks very much, Robert. There's no bubble here either. Been there, done that. We can retire this chart after today, because this, of course, we're marking the anniversary of the peak in the market. The NASDAQ would have to more than double to get back to where it was. I want to talk to you a little bit about where we're going, because Intel will set the tone for tomorrow. It didn't go anywhere today. Intel and Cisco would have to almost triple to get back to where they were 5 years ago. Maybe this is what good news looks like. Microsoft has basically treaded water, had been dead money for the last 4 years. Yahoo, one of the leaderships to the downside. The pets were on the climb all 5 years. And do take a look at while tech's tanked, tank top soared. And by that I mean Sun went from a $40 stock to a $4 stock, while Urban Outfitters climbed 1,500%. I want to share with you some kind of cute comments that I got from a trader when I asked him where he was 5 years ago and what lessons he learned. He said, "Oh, I was with Julie. I didn't think about anything else. I was in no pain, had 7 figures in my account." And basically what a journey it was. The lessons he learned was that don't stay in small caps exclusively. And had he been more diversified, he would have had a lot more agility in order to move things around, because he said before you could gauge what was going on, so much of it was gone. So let's a quick look at where we stand. 2059 on the NASDAQ this March 10th. Maria?
All right, let's bring in some more voices. Maya Kalicki has been covering the oil market at the New York Mercantile Exchange. Rick Santelli covering treasuries at the Chicago Mercantile Exchange. Everybody, I want you to listen to a comment from an interview that we brought you yesterday from the chairman and CEO of ExxonMobil, Lee Raymond, when we talked about 55